All right, so good evening, and this is yet another Thursday evening, 19th of December 2019. Markets are on a roll. Welcome, mentorship traders, newcomers, new joinees in the mentorship program. Welcome to our Thursday night's classes. The first 10 to 12 minutes, we're going to talk about the Nifty Bank Nifty, create a view for ourselves, and then, as always, I'll take up doubts and questions from your side. So I have the Nifty spot in front of me in the trading view with our channels drawn. We generally do a top down approach. So first I'm going to check the weekly chart. And what do I have here? After the 3-week consolidation on top of this yellow channel, we have a confirmed breakout. We have a move where the index has stretched itself further up, and 12,250 kind of levels is where the index is trading now. That's a good sign. It's a sign which suggests that this rally can move further up, and definitely there are decent headrooms coming in from this long-term rising channel. If I turn this candlestick into a line chart, early signs of divergences are shaping up down below with the momentum indicator, but that's all right. It's not confirmed yet. We have yet another day to go. That's tomorrow, Friday. And then we'll see whether these kind of divergences offer any kind of threat or not. But as of now, the trend is strong, the momentum is really high, and the going is getting better for the Indian markets. Daily chart. As we come down to the daily charts, we see that the previous swing lows held really well. We've got a nice move breaking above the previous swing high. Expected some amount of resistance to come in. This will be clear from the 75-minute intraday chart. This was the erstwhile rising channel, which the index broke, found support, and then bounced back. So this channel is of not much use now, so I'm going to take it off. And the index has also broken outside this blue channel. So that's a strong market in our hands, and we're not going to draw any new channel, not much clarity in it. So we'll keep this blue channel, because if the market dips down, this is where it should try and find some support. Of course, the momentum indicators are deeply overbought. That's the case when the markets are at an all-time high with high momentum. That's not surprising. As of now, there is no sign of worry from the momentum indicators on the daily time frame. So we should not question the trend. We should not question because it's overbought, it should come down, but it seems like there are still possibilities that the index can inch much further up from here. 75-minute charts, the next shorter time frame, and we have another exponential move on the upside. The erstwhile highs we had kept for expected anticipated resistances, some amount of consolidation. I won't call it very well proven resistance, and the index just shoots further up. This was the previous old channel that we had drawn, the breakdown, the retest, the follow through fall, and we're going to keep this channel honestly, because not only has this channel acted really well as prices traded within it, it has also played out really well when prices traded beyond it, outside it. So there is some merit in this channel, and we're going to keep this on the 25-minute chart. This is something that we can just reduce it a little bit and keep it like this, just in case the market decides to dip down. The reason why we are keeping this is this is where the market, or in the 75-minute time frame, did some amount of consolidation, found some support, and bounced back. So we're going to keep this. The previous highs are over here, so we should ideally we should ideally keep something like this also in our mind. There you go. So these are the two zones of supports that the index can face if prices decide to come down. Again, I don't see there are signs of intermediate divergences one after the other, but a short-term dip is fine as long as there is no signs of quality damage coming in from the longer time frame. This market is in a strong uptrend. This market is at a lifetime high. When momentum is picking up on the upside, it just shoots up vertically. So let's not doubt the trend, and we should continue to stay our bias on the market as strongly bullish. Bank Nifty weekly chart, and we are inching close to the upper border of this rising channel. This is an old channel starting all the way back till October 2018. So we're looking at a 1-year-old channel and all poised for a possible test. Now over here also we have, if I turn it into a line chart, you can see early signs of divergence shaping up with the momentum indicator down below. So both in the Nifty and the Bank Nifty, we have early signs of a divergence. The confirmation whether the divergence is there or not, we'll get it after tomorrow's close. And of course, after that, next week, if the market decides to come down, we can have some consolidation, some correction due to this divergence. But that needs to be seen. As of now, all-time high, the market's holding well. Daily time frame, this was the steep channel. We had a breakdown. We expected support coming in from previous highs. It did give us good support. Bouncing back and hitting the lower boundary of this red channel. We'll keep it for a couple of days because we're seeing candlestick patterns which are shorter in range, negligible size of body compared to the range contraction. So the market seems to be tiring out, pushing its best on the upside, but follow through is kind of lacking. The market's showing strength when it comes down. The strength is not here to go further up, but to bounce back from the lows. So we'll keep this in mind. We'll see how it plays out. Of course, momentum indicators are deeply overbought on the daily time frame. We're going to keep these levels as supports coming in from the daily chart. Trend is intact. One time frame lower, we go to the 75 minutes and we find some amount of consolidation coming in. This is a rising consolidation which takes the shape of a rising wedge. Now, rising wedge after rising markets are not signs of continuation, they are signs of reversal, and they can be sharp reversal, honestly, if you ask me, when they play out well. So keep this pattern in mind. If we have the breakdown, then we can see some amount of selling. There is a gap here. We should keep that in mind. There is a small little rising gap over here. So we'll mark that here as well. This was the previous highs. In fact, this one. So it's kind of hovering a little above the previous high. We can't expect support coming in from here. These are important levels. Rising wedge in the 75-minute bar. A breakdown can lead to a little bit of correction. No big threat on the upside, apart from the fact that a divergence is shaping up on the weekly chart. So the trend is intact. The trend is strong. We see the index bouncing back as it falls down, both in the Nifty and the Bank Nifty. We see beautiful sectoral relays happening between banks and then the IT, and then we saw from the metals a little bit of pharma play. So that's nice rally which is supporting the index overall. I think this is going to continue for some more time. The only caveat to this expectation of higher upsides is the weekly divergences, but it's too early to comment on that. It's too early to say that because of this weekly divergences, markets will come down. That probably will get some clarity by the time we reach next Thursday. But as of now, as we trade tomorrow, the bias should be on the positive side. Because the bias is on the positive side, look for swing long trades as the market dips down, both from the daily time frame as well as the shorter time frame. Contrarian traders can show a little bit of guts and go for contra short trades. At times they will work, at times it will not, because the underlying trend is very strong. So I would rather go with swings than contra. Contra within the larger stocks, I think I'll be more comfortable rather than the second tier of stocks. By that I mean stocks like Reliance, SBI, ICICI Bank kind of stocks. If I get contra there, I might go for that. But overall, bias is positive. We expect further upsides. Christmas is here, and FIIs will definitely go on a break after tomorrow's trade. My experience generally has been that the last week of December generally stays low profile. The range of the index will shrink. Not much activity coming in from the FIIs, so DIIs will not get much off on the opposite side. That is, if they try to buy, they won't find sellers from FII and vice versa. So time to plan out some good events with friends and family. And markets an all-time high. Last Thursday, I think I spoke about, was it last Thursday or any of our live market classes? I don't recall, but we did talk about how end of December the mutual funds will definitely try to maintain the index at a high for showing good returns, right, of their NAV. So having said that, we maintain to stay bullish. Markets at an all-time high. The country is boiling here and there, in fact, everywhere on new norms, new decisions, new rules, but stock markets is at an high and we should stay, strategically, we should stay bullish. So that was the view on the index. We'll now move on. Mentorship traders, feel free to drop in your doubts and